G'day everyone, welcome back to Pete's Investing. Today is March 24, 2023. This is the iron ore price update. You can see here on the daily chart, the price has broken down through this support area, this key support line we drew, and it's now reaching, I've drawn a Fibonacci retracement here, it's now reaching the 38% level. It's about halfway down there, so there's potentially further declines to go. You'll notice also on a CCI, the CCI is continuing its downturn, and on the 4 hour and the hourly, you'll see it's touching the moving average. We haven't got a moving average on the daily. You haven't got enough data in this particular chart to show that much history. But on the 4 hourly and the hourly, you see there it's touching the 4 hour moving average, and it's broken down through the moving average on the hourly. If we zoom out, see a bit more clearly, get a bit more history. Again, you can see there it's reaching the Fibonacci retracement level, as I said, and it's still sitting above the price of the moving average 200 of the price chart as well. If I zoom into the 4 hour chart, you can see there the moving average of the price chart is still in an uptrend, although the CCI, which is our major indicator, is also in an uptrend, but it's kissing it, same as the moving averages on the price chart as well. The CCI generally tracks this similar to the moving average 200 of the price chart. So this could be, although there is some differences, and I'll show you that in coming up in the next chart as well. On the hourly, you will notice that same Fibonacci retracement is shown, and it's broken through that key support area, and it's now reaching the 38% Fibonacci retracement. The CCI is broken to the downside, so is the moving average 200 on that price chart. But you will notice there are some more very similar tracking to the moving average of the price chart of the 200 versus the moving average 400 of the CCI 1500. So you'll notice there, for example, it told you to get out of the trade early on there, similar to that exit there, whereas the moving average of the price chart told you to stay in it potentially for further upside, whereas the CCI was giving you some warning to say, look, keep away from entering long positions and entering primarily short positions only, and it eventually did break down. There's some other charts in terms of the US S&P 500 is a better chart to show that, but again, just reference that video to get a better understanding on that particular tendency, how that CCI moving average works. But in terms of trading this, I only take short positions, and I've got some fractals here on the iron ore price. Again, you would have taken, when it broke down, you probably would have taken a short position on that level there, and it's played out there, and it's broken down to the downside, and it's just broken to the downside again in the last couple of hours as well. So potentially short positions only. In terms of targets, you may want to choose a 38% target or a moving average change, or I'll let you choose an exit strategy. But at the moment, there's pretty obviously going short positions only since it's broken that key support. To understand how to properly trade using some average down approaches and what particular targets you may want to use, reference some links in the description below. Subscribe and like the channel. If you really like the channel, support us on Patreon, and we'll see you in the next video.